So with us today is Michael Morris, who is Chief Executive of Picton Property Income. Michael, you just released the FY21 results. Could you give a brief overview of those?
So actually, Picton has had a good financial year. Obviously, we've been impacted by the pandemic overall. It's had an impact on rent collection, although actually, overall we've been up near 92%, I think. In terms of the balance sheet side of the business, clearly in terms of our positioning, our high industrial weighting meant that we benefited from the recovery that really came through in property values in that particular sector in the sort of second half of the financial year. So overall, we've ended with profit, up 50% on the preceding year.
Michael, Picton has got a strong record of property portfolio performance, a very strong and consistent record. Could you just say how you've managed to achieve that?
So in terms of our performance, at a property level, we've outperformed MSCI now over 1, 3, 5, 10 years, and actually since inception. And really that's probably around three things: owning the right assets in the right sector at the right time. And we've been fortunate in this current part of the cycle where industrial has been the top performers to be quite heavily overweight there. And equally, we have a very low weighting at the minute to retail and leisure. And clearly that's the sector that's been most impacted by the pandemic. Obviously, it's around the actual asset management of these assets. And, we have a portfolio with 350 occupiers. We've always said it's about our sort of occupier-focused, opportunity-led approach. And, in this last 12 months, where we've had to work very closely with occupiers under some very difficult conditions, I think this has very definitely borne fruit.
You said, as you said, the property market has been recovering in the last few months. How does it look to you today, and what opportunities do you see for Picton in that environment?
So in terms of the market looking forwards, clearly this varies a little bit across sector, but in industrial warehouse logistics, there seems to be good demand and limited supply. The office sector in the short term has still got a little bit less demand. That's clearly impacted by working from home. But what we are seeing is occupiers thinking about the quality of their space and upgrading space. And I think that's something that plays into our hands with the type of space that we have within the Picton portfolio. And retail and leisure recovering, but still, I think some challenges in that sector in the short term. We've got to wait for perhaps a more normalised market, particularly in London and tourism and things like that, and the office sector coming back to work before that picks up fully, but definitely, in a much better place than at the start of the year. In terms of our portfolio, we've got quite a lot of income upside to come through the leasing of vacant space. We're running about 92% occupancy at the minute. The predominant upside there is coming from the office sector, but we've also got within our industrial portfolio, certainly where market rents today are higher than passing rents that we receive. So there's quite a bit of upside to capture from that element of the portfolio too.
You've got a very strong balance sheet, low gearing and available debt. What are your plans for that?
So our view in terms of the balance sheet is that we do feel that we are in the early signs of a recovery phase, certainly in some of the sectors within the portfolio, and being able to deploy the revolving credit facilities that we have not only should capture the upside from that recovery, but also be earnings accretive. And that's something that we're looking at closely, very much dependent on the opportunities that are coming up in the market in the next 9-12 months. So in terms of our portfolio, we still think it's pretty well positioned. So in terms of new opportunities, we're quite fortunate to be able to look across both sectors and geographies and very much think about opportunities from a bottom-up perspective, and that's what we'll continue to do.
So when you look forward to this current year, Michael, how do things look in terms of Picton's performance?
So I think from our perspective, the portfolio remains well positioned. As I mentioned previously, we've got upside potential coming from deploying our revolving credit facilities. And there's also this income upside from the existing portfolio in terms of particularly occupancy, and we've already undertaken some lettings post year end that have improved occupancy and capturing further reversion. In terms of last year and our dividend, we obviously reduced that at the very start of the pandemic. We've taken 2 steps so far to increase the dividend. We're back up at about, or just over 90% of pre-pandemic levels. And I suppose as we look forwards, the dividend is very much dependent upon the overall conditions that we're operating in, and we do hope to be out of this current type of lockdown quite soon. But I think that will be a trigger in terms of renewed confidence, further leasing activity, and the points that I've mentioned that are going to drive the underlying income. But once we start to see those flow through, then that clearly gives confidence in terms of moving the dividend back to pre-pandemic levels.